Walmart causing an uproar on Wall Street. Starting this morning, the world's largest retailer told investors and the world, we're cutting our 2015 revenue by $15 billion. That immediately, see this intraday picture from the previous date, sent its stock plummeting to the lowest level since 1998. But right now, brokers on Wall Street are furious for a couple of reasons. Charlie Gasparino has more on this exclusive story, including the fact that before the news broke, the CEO, Doug McMillon, was on another network. It was on CNBC.
Right.
I walked past a monitor, saw it. He was smiling, and I thought,
Right.
oh, they got a great exclusive with him. Good for them. He looked happy.
Right. Listen, if you were going to say what were the two culprits for people that held this stock or trade this stock today, this was a huge surprise. This blew away the market. The stock doesn't go down that far on an investor day.
And he said nothing on the interview?
Well, he talked around a lot of stuff. Now, here is the rub. They really didn't press him on, they needed somebody there to say, will there be any surprises today when you unveil what you're going to unveil? By the way, he was having an investor day. I believe the investor day was at the New York Stock Exchange. I could be wrong on that, but I believe it was. That's where the shares are traded, the Walmart. They did not ask that very pertinent question. And if he said no, if he lied, if he didn't, the investors at least would have gotten some indication of what was to come a couple hours later, which was this announcement about profits, sinking for the past year. The company in fairly...
Here it is. EPS, earnings per share, will decline 6 to 12% in fiscal 2017. That's a lot, folks.
Yeah, that's a lot. So now here's the thing. So
why is he smiling on the other network?
And why are they smiling? But I would just say this. And why are they treating him like a buddy, a pal? I would just say this. Two culprits here. Number one, a lot of people blaming that interview on CNBC, not preparing them for what was to come, that there was a surprise, that something bad was going to be announced. But number two, there's a lot of finger pointing at the New York Stock Exchange. Now, I have to concede, I still have not gotten this unraveled from the New York Stock Exchange part. And we do have calls into the Stock Exchange PR apparatus, and we do have calls into Walmart. Traders are telling me that the New York Stock Exchange should have halted that stock. Okay, traders,
pending bad news.
And didn't. Pending bad news. Traders are telling me that Walmart probably, most likely, relayed that news to the New York Stock Exchange either yesterday or sometime before the announcement. Okay, and that the New York Stock Exchange deemed it not material. This is what the trading floor community is saying. We do have to. We're trying to unravel this with the stock exchange. We're trying to unravel this with Walmart. I go back on in the 4 o'clock hour. I may have an update, but that's the statement we got about why they didn't halt the stock. So this is kind of interesting. The stock exchange, which has been taking a lot of heat lately for technological issues and other issues, is now getting some heat on how they handle this Walmart thing. Now, why do you halt the stock? Because when you don't want investors to be so blown out of the water by this news, taken by surprise, that the way the stock exchange is supposed to work is that when you halt it, it gives the specialist a chance to come in and maybe bid up the price, knowing that news isn't as bad. Okay, but when you're totally shocked, that's when the stock goes down and plummets, as it did today. Investors lost. This company's market cap was cut by billions today.
Well, Warren Buffett owns 70 million shares, and word is he was clipped by about $370 million just by the
Warren
fall today.
Buffett, yeah.
Berkshire Hathaway owns that much. And just think, mom and pops, it matters more. He's got other companies to offset his portfolio.
I will say this. Journals make mistakes all the time. This isn't like an ethical mistake.
Could it happen to anyone?
It could happen to anyone, but
not on the CEO's side. He should have been a little more upfront.
I think
not gone out there.
I think
maybe not gone out there.
I think they should have pressed him. I think they should have said, are there any surprises? And then the investors would not have been as surprised.
So for those who are driving, listening on XM, the stock is down nearly 10% right now. It's the biggest drop in Walmart's history.
Totally took the market by surprise, even after CNBC had the CEO on hours earlier. That's what's getting people crazy. And now here's where it gets really interesting. Did the New York Stock Exchange have a duty to halt the stock, knowing that the news was coming out? So we're going to unravel this.